Welcome everybody once again to another edition of Community Capital Live. I know we got a lot of people coming into the room right now, so we like to welcome everybody, whether you're watching us live. We're big appreciators of our live participants. We love having you guys here because not only do you get to see the conversation live, but you get to participate in our audience Q&A. So as you're listening to today, make sure you save your questions for that time. I'm really glad to have you here. And also those of you watching in the future, I'm grateful for you spending any of your time with us. We know there's a billion content options out there, and we're glad that you are dedicated to something you care about, what we care about in this room here. So Community Capital Live is a collaboration focused on talking about the ways that communities are really taking back control of their finances and are regenerating their money in ways through community investing, local investing, impact investing, and really what those funds look like, how they operate on the inside, and what it would mean to emulate them and to have your own community impact through your own community fund. Today, we are talking with Alex Saingchin. I hope I'm saying that right. Yes. All
Perfect.
right. Sweet.
Yeah.
From Just Futures. Very excited to get into that. But first, let me introduce our partners and panel. So, first, want to mention the Main Street Journal, which is really the go-to place for everything having to do with local investing. So, if you want your money locally invested rather than in Wall Street, Main Street Journal really is the place to go to get started to learn about all of that. Check that out. We also are partnered with Impact Alpha, which is another publication, but instead of focusing on place-based local investing, it's focused on impact investing wherever that impact may be. It's really the Wall Street Journal for impact investing. We are listed there as a podcast with them too. So if you're here through Impact Alpha, good to see you guys. Happy to have you here. And also want to make sure that we give a shout out to Neighborhood Economics, another one of our partner groups here, which is really a series of gatherings, of conferences, of events that put all the people in this world together that need to be there to really make sure the ecosystem can have a place to grow. And Kevin, actually, you guys just had your big conference for the year down in or up in Chicago. Any major takeaways from that you feel like would be good to share with the group here and why they might want to get to the next one?
Yeah, I mean, our tagline is we gather the people repairing local economies. And there are just so many more innovative financial solutions that bring economic power down to the grassroots level than there were a decade ago. About 10 years ago, when we started, we could point to Kiva Local and not really point to so much else. So the innovation is more at the grassroots level, and there's more catalytic investors and DAFs are showing up and trying to figure it out. People with donor advised funds, and that's a new thing. So we're glad that it was a very successful event. I was really happy with it. Thanks.
Yeah, I got to say, having been to Neighborhood Economics Conference, not only was it hugely enlightening as far as like just what I learned there, but the quality of people there and the connections and the experience was just such a good thing that I would go back again just for the fun of it, let alone all the things you get to learn.
If I can add one thing that
Yeah.
happened on one session, it's really interesting. We're doing soft capital to make housing more affordable than affordable housing. And one presenter, Aisha Weeks with the Deerfield Fund, has got a really interesting innovation. It's kind of a 15-year bond that would pay for down payments and be paid back long over time. And CDFI friendly South Bend has something that provides kind of a revolving equity pool for affordable housing developers to get the deal done. And they realized they could partner together and together reduce the cost of housing by about 60,000 more than they could have without it. And so it was you help the developer, I help the homeowner. Together, more people get in houses. So just the partnerships that even happened on stage by surprise were pretty interesting.
Yeah, awesome. Love to hear it. And our panel for today, you just heard from Kevin Jones, who is the co-founder of Neighborhood Economics, also the co-founder of SOCAP. and Impact. What was the co-working space? It had
The Impact Hub, and Good Time.
Impact Hub. That's right. Yeah. Yeah, a bunch of things that we could list, spend a lot of time listing. Kevin's going to be joining us on our panel today. Glad to have you here. Also, Michael Schumann. Not only is he the editor-in-chief of the aforementioned Main Street Journal, but he is the author of multiple books on local investing, how to get started, whether it's just from a personal standpoint or from a community standpoint. Check out his books, especially the most recent, Put Your Money Where Your Life Is. So, Michael, so grateful to have you here. Thank you for the Main Street Journal, and thank you for your contribution to this world. It was your TED Talk back in, I don't know, 2010-ish, maybe it was even before then, that I remember seeing that kind of lit open my eyes in a lot of ways to all of these things. So, Alex, glad to have you here. Really, really glad to get to talk with you today. I know you have a pretty long background here, and I know people can kind of look you up to go into more detail on it, but I am curious if you could just kind of shed a little light on the work that you've done in the background. I know that you've supported movements for racial, social, and environmental justice, grassroots organizing, impact litigation, public policy advocacy. I guess what was it that moved you into the work you're doing now with Just Futures?
Yeah, I mean, for us, really, with Just Futures, and for me personally, it came to the challenge of it really shouldn't be difficult for someone to invest alongside their values. Whether you are a worker, at a larger company, you're part of a worker-owned cooperative, you've been working in nonprofit for decades, or perhaps you're in philanthropy, right? Whether it's your retirement savings, right, or your reserves, endowment, or you're trying to build a fund, it really shouldn't be hard to invest your money with your values. As you mentioned, I've spent, nearly 30 years supporting social movements for social, racial, and environmental justice, played numerous roles, and all of that was really to search for truth, right? The truth to oppression, the truth to injustices, and what are the different solutions that we could take to address them. And all of those different roles led me closer and closer to money, right? And our relationship to money. And especially, over the last 15 years, I spent a lot of time in philanthropy, managing millions of dollars, supporting grassroots organizing and social movement work, trying to do really rich, bottom up social change work and moving millions, but then simultaneously getting deflated, frustrated when I'm in these board meetings every quarter and folks are ranting and raving about 19, 20% return. And folks were asking the question, at what cost, right? At what cost to our grant making? At what cost to our communities, to our workers? And, for what purpose are we in perpetuity when the world is coming apart? So several years ago during the pandemic, right, I was consulting on my own, doing work with both grant makers and capital activists who were reaching out to me to support Black and Brown communities in a more responsive way, and being very frustrated. And simultaneously, that also included folks with retirement plans, right, and having spent decades of their job, fighting for social, racial, and environmental justice, doing grassroots organizing, right, but then getting very, very frustrated that they were investing in the same companies that they were fighting day in and day out of. That really was the genesis for Just Futures, right? We started to see that there was a massive gap, specifically in retirement. And we went out and raised money from our friends in philanthropy, raised a few $100,000, and we did a listening tour, Joel, of over 200 folks, nonprofit organizations led by people of color, for people of color, and they told us three main things. First, they really resonated with this idea of a values-driven retirement plan, but they wanted something rooted in solidarity economy, new economy, just transition, whatever term resonates with you. And what that means is they wanted to invest in land trusts, mm-hmm. worker-owned co-ops, businesses not only run by Black folks, but owned by Black folks so that they could really benefit from their own labor, their own strategic thinking beyond just being a wage slave, right? But they were skeptical that something like that exists. And they're right, it still doesn't exist, right? We don't represent that our project goes that far, but we're working towards it. And folks, we also learned that folks were getting 7, 8-figure sums from Jeff Bezos, Mackenzie Scott, sitting on the money in cash. Why? folks fundamentally did not trust the existing asset management industry, which, as you folks probably know, is 98.6% controlled by white men, to not greenwash the money. So they asked us, would you folks be willing to do it? And so while we were so focused on retirement, it just opened the door to all the past work I had been doing in philanthropy, that there needed to be a very different kind of investment advisor. So Joel, that was 4.5 years ago. We have been a registered investment advisor now for 2 years.
Mhm.
We have a values-driven retirement plan that's screened from a grassroots and community lens. We screen out, those big, nasty asset managers like BlackRock, Vanguard, Fidelity. We've identified more the dirty corporations that have been most frequently targeted by grassroots organizing campaigns. So groups like Chevron, Exxon, Tesla, Amazon, etc. So those are either minimized or outright divested from our portfolios. And then we work with nonprofits, foundations, right, on asset management, from public equities all the way to our heart and soul, which is community-led investment funds that are providing patient and affordable capital to BIPOC communities. But we also support visionary, right, community leaders who are accountable to their communities, are able to fundraise, and want to deploy patient and affordable capital so that we can flip the script on finance. We provide with the back office administration and work around that. The last thing I'll say is what makes us different, and really when you go to the question of need, we think that the financial system needs to fundamentally change, right? Right now it's structured to accumulate wealth for those who least need it, and they're using financial advisors who are just getting wealthier and wealthier, and quite frankly, do not know how to deploy capital to low-income communities, communities of color, women, right? And so we wanted to be very different. We didn't want to just be another investment advisor with more women or more melanin on our team. We wanted to fundamentally be a different kind of model for how the financial system should operate. So we've committed a majority stake of our company to 5 movement groups that are organizing and innovating towards a regenerative economy. So that's the National Black Food and Justice Alliance, Chisholm Legacy Project, NDN Collective, Center for Economic Democracy, and Right to the City Alliance. Right now, they have 30% ownership, 30% representation on our board, and 30% representation on our investment committee. Once we become profitable, which should be in about 4 years, they will have majority stake, right? So they will have a majority stake of our equity, a majority stake on our board, and a majority stake on our investment committee, so that they can really have their hands on ensuring that we're moving investments with values that are responsive to our communities. And so very much like we didn't want to just have a firm that makes ourselves richer. We wanted to be a source of redistribution, regeneration, right? So that we can give back to the communities that need it most. So that's what I'd say, Joel, to the question of how do we make this pivot? We made this pivot because we wanted to make an impact in the root causes of injustice in our financial system. And we really wanted to democratize finance, right, for the communities that need it the most.
So as an advisor firm, because a lot of the groups that we're talking to on these shows are typically funds themselves.
Mm-hmm.
You guys are connecting those funds to the individuals who are actually making the investments by being the advisor who knows about the solidarity economy or just economics, which is a really, I think, underserved market. Like, I don't care who I've talked to, whether they're the most conservative person I know or the most left-wing person I know. If I talk to them about things like investing their money into their local economy, investing into businesses that have the values that they have, pretty much 100% of the people that I talk to think that that's a great idea and like that idea. But there's such a disconnect between that and between someone actually knowing what to do. And I've been in financial services on the insurance side for like 10 years now. And I don't know like how many advisors I've come across who have never even heard about the idea of local investing. So even if someone wanted to do this and they were putting away money for retirement, if they go try to finding an advisor that can help them with this, it's near impossible. So I'm curious, like how you guys are. Is there any effort for trying to like help in the education of advisors? Is there, when we're thinking about systemically changing this, I'm curious where your
Yeah,
head is at when it comes to that problem.
yeah, thanks for that question, Joe. It's really, really great. And you're right. When it comes to values-driven advisors, um, period, and then you add in layers of diversity, whether it's gender diversity, racial diversity, et cetera, it gets even smaller,
Yeah.
right? Literally, there's
Oh yeah.
15,000, there's like 15, maybe 15,500 registered investment advisors in the country. I can count on one hand how many do retirement in a values driven way, and I can give you those names. Likewise, when you're working with businesses, nonprofits, foundations with their reserves, et cetera, maybe 30. And even then, it's arguable like how much of a fit to an organization's charitable purpose mission there actually is, because the work is very, very broad. So a big part of what keeps me up at night is how much of a tsunami we're against in terms of mainstream finance,
Yeah.
right? And the lack of awareness. So yes, it's constantly on our minds. We collaborate with groups like Justice Funders that thinks a lot about investor education, investor behavior, training up other advisors. They have a cohort called the Just Transition um, uh, uh, Integrated Capital Academy, I think it is. I forget the name exactly, but it's this whole same idea of training up advisors to think differently. We work with folks like Full Spectrum Capital, right, who also is also thinking about this. And you know, a lot of our folks in the ecosystem are thinking about scaling across. It's not like trying to build one institution that is going to train up all these different advisors, right? To think of it differently, to think about communities of color, to think about climate, right? It's about how are we spreading our knowledge across numerous layers, right? So that we can grow and have, you know, that metaphor, 1,000 flowers blooming and bringing folks up. But certainly, let me say, Joel, this is a big part of Just Futures existence, right? It's not only about creating financial solutions that advance a just transition to a regenerative economy, but creating a rich learning space, right? For folks, new folks into progressive advising, folks who have been, you know, old hats in the space, but thinking about how is it that we do something very differently. So even with our investment committee that I mentioned, Joel, right, it has a significant number of folks who come from community, right? They're fund builders themselves, right? And they want to learn more about mainstream finance because there's tools there that could be useful for scaling up our community investment funds. And then likewise, we have folks, practitioners who have been doing this work for 15, 20 years, right? Have high levels of pedigree in mainstream finance, have done ESG and investing work, but they need to be edified, right? About how is it to work with community, how to think about community leadership and community governance, right? In a very different way, because
Mm.
it's not the same relation. And I'm an attorney as well, right? It's not, you know, if you want to be a community lawyer, if you want to be a community investor, it takes a very different mindset than just trying to get it done. There's a cultural appropriateness, a linguistic appropriateness to how you work with regular people who are really already rooted to community. They just don't have our finance skills. Maybe they haven't taken a Series 65 or all these different things. But how do you bring those mainstream skills to empower local communities who have been historically outside of our credit system so that their voices can be realized? So what we're talking about here, Joel, is a very, very, very different kind of finance, a very different kind of tone and approach, right? Because we're working with folks, we're working with a system that fundamentally doesn't think that way. So it takes a level of sort of self-awareness, I would
Mhm.
say, and willing to change, right? And to flex because we are trying to do something very different. And that's fundamentally what Just Futures is about. We're very, very vision oriented and intentional. At the same time, it's quite messy
Oh
because
yeah.
we're trying all these different things, but with this intentionality of being accountable and rooted to community.
Well, and what seems to me like what you said that makes it different on a big way is what you were talking about before, where it's not just about symbolic representation, but it's about
Right.
changing the kind of ownership structure. And so I imagine, you know, you mentioned Yeah, is there anything else you want to kind of hit to on the importance of investing in the types of businesses that have that collective ownership piece, that worker ownership piece? And then I'd love to kick it over to Kevin and Michael after that.
Yeah, let me just say the economy, and I don't remember if I touched on this. The economy is fundamentally structured for the rich. So our research has already uncovered that the wealthiest decile in the United States has 90%, owns 90% of the wealth. That decile, their capital is 80% of the money flowing through wealth. So really, if we're talking about fundamentally changing the economy to prioritize everyone meaningfully, to prioritize climate, communities, things like that, you have to be investing in different structures that flip that pyramid. Instead of the point going up, the base should be up. We should be investing in community investment funds that provide broad opportunities and structures, Joel, for wealth building, right? Not just by paying folks a little bit more, by paying a livable wage, by providing a good retirement, which of course is very, very important to us, but by actually providing ownership, real ownership. And we love community advising, community advised funds and things like that. But where we would push those who want to change the system, to think beyond just input from the community, but to have them have a real stake in ownership, again, so that they could prosper in a far more sustainable way than just getting a better job that might go away when the owners take an unaligned exit and they themselves get rich and have a nice retirement, but all of a sudden we're getting into a Ben and Jerry's and a Unilever situation where there's tensions between the new parent and the really rich community sort of roots and sort of efforts that the original company wanted to have. So, that's where we take the work and think about the work overall in terms of really trying to shift capital, whether it's from our retirement pots, asset management, or building funds for community investment.
Love it. Michael, I'll get out of the way now because I could do this for another hour and a half, I think, with Alex. So
Great. Well, I wanted to just dig into a couple of the details about these different portals of activity, and maybe starting with the investment management side. What is the size of the capital that you are overseeing right now, and from how many investors is that, and where do you see that in about 5 years?
So thanks, Michael. Well, I'll say across both lines of work, we're working with about $70 million, and specifically with the asset management line, it's about $50 million. You asked the question about 4 years, we should be at a $500 million. That is our goal.
I like that optimism.
we have that as a goal. So far, it's moving forward, and it's been really a tremendous learning opportunity, almost a privilege for me to be doing this work. Our retirement work is fueled by regular people, regular workers, nonprofits, mission-driven organizations that really want to make change with their money, right? Being able to invest in risk-adjusted portfolios where we screen with over 70 metrics that align with gender justice, racial justice, economics, divesting from the prison system, et cetera, et cetera, et cetera. So depending on your mission orientation, right, and mission focus, there's a space for you that your values show up in our retirement portal, right? And that's for regular folks. So whether they have a new retirement plan, or these are organizations that have existing retirement plans, millions of dollars, we work with them with a turnkey solution so that they can align their money with their values and achieve the financial performance that we're looking for. On the investment part, go ahead.
I'm sorry, go on.
Yeah. On the investment management and asset management side, right, it runs the gamut. So we are working with funds that have, we have a place-based fund that we're working with in Atlanta, Georgia, called Ground Cover. That's a $20 million raise, right? And they raised more than half of it. And their terms are super bespoke, right? So it ranges from taking in grant capital, right? Because folks really want to support the community governance and community leadership side. That stuff doesn't make money, right? But it's super important to the operation of the fund, right? And their check sizes, I think that's what you asked, range from 200,000 minimum to larger. We're also working with the Just Transition Integrated Capital Fund. That likewise is a $20 million fund, and really it's so amazing. It's so visionary because it's trying to take capitalism and flip it on its head. So rather than, with an early stage fund, a typical VC is going to want to take a higher return because you're taking a lot more risk. Here, JTIC Fund and the funder organizers have worked with a group of very progressive investors to get them to commit 0% money in, right, for 10-year terms and deploying 0% money out for likewise very patient terms. So there's no spread. There's no shifting of the risk or the return to the borrower. This is an example of the funders wholly owning the risk and realizing, in this case, they're all philanthropies because they are, sitting on hoards of wealth that they don't need it. But by shifting their capital in a highly affordable, highly patient way and talking about it, we can little by little have a very different conversation about what wealth is supposed to do, what philanthropies are supposed to do, not make money for their own sake under the guise of social change work when the math really doesn't bear that out, but really taking this posture that they have more money than they need and that they should be taking more risk if we're trying to lift up low-income communities and communities of color.
So in our audience today, there are several nonprofits, there's several small for-profits. If they were to knock on your door and say, hey, Alex, we need your help in structuring a workplace pension plan that can tap into the criteria that you have laid out, is there a way that you can help them, and what does that look like?
Yeah. So we have these conversations all the time, and folks are coming to us with either they want a turnkey option, right? Because they want something that's significantly better than what they have, or they're going to the route of we want to invest, in worker-owned cooperatives, right? We want to invest in community investment funds, and we have a research track for that too. Michael, the bottom line is that the way that the current financial system is structured is that for us to create a retirement plan that is wholly rooted in the most powerful principles of community capital live, we're getting there, but we're not there yet.
Right. No, I appreciate that. And,
Yeah.
as you and I have talked about separately, I mean, I would love to see you in the business of helping businesses providing self-direction
Right.
as one of the options for people. But in the meantime, the difficult thing that you're dealing with is that even in a mission-friendly investment universe with the criteria you've laid out, it still is largely about, I think, screening out bad actors rather than screening in good place-based actors. And
Yeah.
do you see some ways of kind of working through that transition in the next few
Yeah.
years?
Thanks for that question, Michael. Placing and platforming community investment funds on both individual retirement plans and workplace retirement plans is part of our North Star. So it's an active part of our research. Right now, there have been some shifts, as folks know here at the federal level, in terms of this openness to platforming private investments onto retirement plans. That provides a lot of folks, with cover into legal cover to do this work. People have been trying to do it. Now it provides a little bit more legal cover, but certainly it helps us a little bit, and that's part of our plan. So as you mentioned, part of our work, we're talking to a few different partners right now, is to create a self-directed individual retirement account, right? One where we would work with our partners to develop a curated list of community investments that are able to receive capital. And we're trying to find an aligned broker dealer that would help us do that. That's an active part of our work, and we're talking to several partners right now. There's a couple of other strands that are a little bit more long-term, Michael, right? So the self-directed IRA is something that individuals can access, right? But it's not a workplace plan like a 401k, a 403b, or an actual pension. There's a couple of strands of research that we're doing. One's a collective investment trust. Another's a self-directed brokerage window, where we could then connect these two types of specific vehicles. I won't get into the details, it's very weedy, right? But that can connect to broad-based workplace retirement plans where you're serving hundreds, if not thousands of people. But then there's this offering set of community investment funds, whether it's, Pioneer Valley Grows, right? NBN Fund, Real People's Fund. That's what we're heavily working towards. The problem,
Right.
folks,
Yeah.
the financial system is not incentivized to do
Yeah.
this. So even though there's a trend towards private placements in private market placements and exposures in retirement plans, it's because they generate yield, whether it's crypto, VC plays, private equity, real estate, and really predatory REITs and things like that. So we're in conversation actually with various custodians, impact investing platforms to see if they partner with us when this financial play really isn't viable here with our community investment funds that had, low yields, right, and affordable rates. How can we do that? That's why there's a combination. When you ask me, where do we want to be 4 years from now, right? It actually, in our research, it's aligned with that because as we get bigger in scale, the type of conversation we would have with a custodian about platforming, let's say a real people fund, becomes very different. Right now, we're on the smaller side, so our negotiating skill isn't quite there yet. But I'll say this is a problem a lot of folks have been banging their heads against. Our overall goal is that we don't give up, right? Michael, you named it. Our product does three things. It provides you an opportunity to align with your values, but largely in the public market, not. It is turnkey. So your HR folks don't have an additional headache in just trying to administer another benefit. And, it is rooted in financial performance, right? That said, we know that's not the end all. We have to keep researching and moving towards our North Star, our mission, which is to platform those regenerative finance funds on those workplace retirement plans. But it's tough.
Yeah, those are great goals there, and I think we are in a moment where there is some real openness. I mean, it's hard for me to speak any encouraging words about this administration, but there just may be a sliver, given what they've decreed already around
Yeah.
self-directed instruments, to expand that just a little bit to maybe creating some portability with IRAs and 401ks in workplaces and moving them elsewhere more easily and filling them with some of the other local stuff. So I think the environment may be interesting one. Kevin, over to you.
I'm really loving your approach and what you've done. How many individuals make up that 50 million that you have?
Individuals, 20,
20
25.
individuals. Okay.
Yeah.
And then how many nonprofit groups are taking advantage of your services?
Yeah, we have about 160 clients overall. And so I want to say the vast majority of them are nonprofits, foundations, social enterprises, worker-owned cooperatives.
Smaller foundations, I guess.
For the most part, most of the foundations are under $150 million in assets. Yeah, but that said, we're having some very, very rich conversations with bigger foundations on their needs. This is part of the overall challenges for a new RIA, right? Especially an RIA of color, right? Even though our chief investment officer has nearly 30 years of asset management experience and has managed hundreds of billions of dollars, people look at us as we're a brand new advisor, right? That took the Series 65. It's a frustrating thing that we call the fake rules of finance that really keep people of color and women advisors down, right?
Right. And I saw on your site that you also want to do due diligence and help people start funds in their communities. So I'm in Western North Carolina. We're the heart of the Helene, and in the neighborhood that I our house was in, it still is in, 1 in 6 houses was destroyed or rendered uninhabitable. And there's a interracial, bilingual group, largely Hispanic, that is becoming the real, social service backbone in that area. And they are interested in a housing fund. They're working with nonprofit housers, but there are, there's not a lot of creative capital at the table. And they've asked some folks to start looking at that. Could you be an advisor on a fund creation to, make housing more affordable than the local nonprofit housers? Could you help with that?
Yeah, absolutely. So we get inquiries like this all the time.
Yeah,
Folks who are rooted in community are thinking a very different type of ownership, right? But they may not know how to actually run the nuts and bolts of all this.
right.
That's where somebody like our George Guerrero, 30 years of experience, he actually, prior to Just Futures, took a fintech startup that works with nonprofits serving people with special needs from 0 to 100 billion, $1 billion, right? And created specific custom tailored pooled funds for each of these efforts, right? And so that's a big part of what we do, not only at Just Futures PBC, but there's a nonprofit that we collaborate with a lot called Just Futures Impact, founded by the same crew of folks, but very different sort of orientations to what types of instruments that it works with. So in that case, that's our fund management, fund hosting, fund building kind of vehicles, right? And so whether it's, in this case, local community housing, working with farmers, right? Black farmers on an ownership structure, right? Or things like the Just Transition Integrated Capital Fund. What we do is actually build custom teams that are personalized, right, to the individualized needs of that particular community and effort. What we find, and we see these funds all the time, every week we probably see a new one. They're all bespoke. Why? Because communities are all different, right? Kevin, in your case, you're talking about a Latino community, right? And I think you said,
Largely.
right, they're linguistically Spanish monolingual is I think what I heard generally, right? And so how do you create a fun team that can work with them, right? Assess their strength, leverage their strengths, right? But find the right capacity, right, to fill their gaps, right? And each fund is very different. They have different terms, different community leadership, different funder audiences. So what we do is try to craft a crew of consultants that we have vetted and trained so that they can get the right type of service to take their idea to the next stage or advance along their sort of growth stages to the next level. And really that's our our where our heart and soul is really working with visionary leaders who are thinking very differently about capital.
That's really interesting. A lot of the folks it's so there's an 18% increase in Latino population in our county in the last census. And just want to know, it was the cheapest place to go, so that's where they were, which was the most impacted. Also, Black folks gentrified out of Asheville, and then the poor white folks who were there. But the group that is a really strong community group, but a few of them have savings accounts, right? And many of them cash their checks through a local Mexican restaurant and Mexican food store. I mean, there's
Wow.
a lot of cash business done in the back of the restaurant is how there's not a lot of trust.
Yeah.
And they're trying to start a Latino business association. There's not one in the county, even though. So anyway, there's many reasons for them not to trust. I've just tossed one other element there that I think is kind of interesting, just because I've discovered it. When there's a disaster, they do a thing called a small area plan. And so the county is doing one. It's like, what do we do to make us more resilient next time? A second group is doing a small area plan, and it's kind of led by the Chamber of Commerce and realtors and our tourism. We have a $4 billion tourism industry, and they just gave a grant to a fabulous bike and running track on land that was devastated to make it a great tourism attraction. And it's a place where it's easiest to move in because, so many houses, nobody had insurance. So like we're working against a timeline, and the realtors and the tourism folks, they have a $40 million room tax. And so they have a lot of money around their plan. We have a timeline and we have a story to tell. And these are, it's just, it'd be curious to work with some folks who know how to, I've raised entrepreneurially focused funds, but I've never done housing. So it's good that that exists, and for anybody else there. And I'll connect you.
Yeah, no, that'd be great. And certainly there's
uh,
a lot of folks who are thinking about housing right now. Gentrification
yeah,
is an issue everywhere in the States. If you're not at a place with late stage gentrification, you may be at a place with early stage gentrification and you're not feeling it just yet.
yeah, yeah.
So, yeah.
The hurricane created a great opportunity for the gentrifiers where the poor folks lived. So it's 1 in 6 houses either
Yeah, no, the disaster
usable or
capitalism is
wrecked.
disgusting.
Yeah.
Yeah,
Thank you. That's really
absolutely. Yeah.
that's fascinating. I want to know more. I will stop because I would go on for quite a while. Joel, there are some
Yeah,
questions.
we've got
in the list.
I mean, I agree with you guys. The shock doctrine is definitely real. And Alex, I want to get to the audience questions here, but I just do want to
Sure.
say I appreciate your approach in the way to, especially that you're putting attention on the question that I think it's important to put attention on in all these issues, which is, at what point are we giving communities access to capital, and at what point are we giving capital access to communities? And I think having that question ever present is like incredibly important in this work. And so thank you for that. Grace or Gloria, I'm sorry, I knew it was a G name. I hadn't read it there. Gloria had a question here. Gloria, if you want, you can go ahead and unmute and ask Alex here.
I wanted to know, hi, I'm Gloria Ware. I'm in Cleveland, Ohio, with GTB Advisors. Do a lot of work with entrepreneurs. Wanted to know for those investors that were willing to go in with 0% and exchange a low financial ROI, what are they exchanging that for? What types of metrics are they typically valuing in lieu of
Yeah.
this high yield?
Yeah. Yeah. I mean, it's they're giving up yield, so to speak, for maximum social impact, right? So how do they think about that? One, the fund itself, right, is led by people of color, right, governed by people of color. So that's a metric. It invests in other funds that likewise have that community governance element to it. So the JTIC is actually a fund of funds, right? The underlying investments, right, are in the areas of regenerative agriculture, housing, to Kevin's point, right? Housing is actually a major part of it. Both there's very unique funding entities going on. Housing, food, workers' rights, right, and entrepreneurship, right? I think overall the question about social impact metrics is something that we haven't quite, I think, as a field figured out yet. But just to say that the difference here, right, the really biggest added element beyond maybe some of the investments that you're seeing, right, is the community governance metric. Who controls the capital? Right. To the conversation that we were having before about the difference between advisory, right, or a profit share, better wages versus ownership. That is the main metric where you'll see across the investees, community governance, community ownership of historically marginalized communities. That's the piece where this is the big impact experiment, let's say, right? And it flips everything on the head of what traditional finance says, right? Traditional finance says you have to have this pedigree. You have to be doing this for this long, raise this money for this long, right? And they won't say you have to look a certain way and have to have a certain set of reproductive genitalia. They won't say that, right? But here, what we're saying, we're just trying to flip that dynamic overall, and it will still be successful financially, but also particularly from a community impact.
Yeah.
And you have examples of these types of community-controlled capital
Yeah,
firms?
no, I'm happy to share a list
I would love
of
that.
different
Yes.
funds and fund managers who are
Okay.
really doing this deep kind of
Excellent.
leadership work. Yeah, thanks for that
Thank you.
question, Gloria.
Mhm.
Yeah, appreciate it, Gloria. And then we had one here also from, let me get over to, make sure I'm saying, because I don't want to mess up everybody's name again. I can't do that. All right. Calandra, do you have a question here? I want to make sure we get to ask it. Calandra.
Thanks so much.
Yeah.
And hi, Alex. I have a million questions for you, but not to take up the time here. But one of the models that I've come across recently that I think is pretty interesting, and I'm curious if you or anybody else on the panel here knows about LOHAS, which they have a very unique model. I met them at Climate Week in New York, and they have a model where they work also like you with a lot of really large donor advised funds and philanthropists and foundations and family offices and help them direct capital. And they will work with companies. I don't know about communities, but that could be another interesting model to expand into if they don't already. With a for-profit company, they will create a nonprofit that can kind of sit on top of it to accept funding or accept funds from philanthropic dollars to support the business doing impact work for all different, whatever the
Yeah,
donors, to your point, whatever the donors want, where they want to direct their money. So I just wanted to see if you know of them, if you've seen that model work, and what you think of that.
thanks for that contribution. I'll look them up. I don't know of LOHAS in particular. Is it LOJAS, like a silent J or
LOH,
A?
LOHAS. I
Okay.
dropped the link in the chat so you can
Awesome.
grab it there.
Awesome. So I'm not familiar with the group particularly, but what you're talking about is what we call Model C fiscal sponsorship. And what I would say is that, for all you fund builders out there, it is an incredibly powerful tool for you all to raise philanthropic dollars for your for-profit mission-driven endeavors. We, as Just Futures, we're a for-profit entity, despite the fact that we have this massive community ownership element. And for us, unfortunately, many foundations, institutions really had a very hard time funding us as a for-profit, right? They had a hard time doing what's called expenditure responsibility, which is the legal mechanism for a philanthropy to legally do this. It's very well in use, right? The name of the practice is called Model C fiscal sponsorship, right? And so therefore you have I'm sorry, I was just answering a question in the chat, so I jumped. So expenditure responsibility is something that private foundations and donor advised funds have to employ to say that the money that they're uh, uh, giving to a for-profit is going to be put to charitable use, and the for-profit is committing to using that for charitable use. So that I would say is a very, very powerful way for all of you fund builders that are building for-profit funds, right, but are accessing philanthropic capital and have mission-driven impact, right, to access funds. Just Futures Impact, which is the 501c3 that we collaborate with at Just Futures PBC, we offer Model C fiscal sponsorship to community investment funds, right? Likewise, another place is Possibility Labs. It's a really, really great partner to us, right? They actually serve as a Model C fiscal sponsor to Just Futures PBC, but they particularly have a specialty in working with low-income communities and communities of color, right, who are doing impact investing work and providing that fiscal sponsorship. And then the last piece I would say is the last entity would be Realize Impact for you all. They do Model C fiscal sponsorship, right? It's quite affordable. And again, that's an opportunity for you amazing fund builders to access philanthropic capital for your for-profit endeavors. I think it's an amazing tool, Calandra. And I'll say more and more overall, given the unprecedented assaults on the 501c3 form that we have been facing over the last 6 to 9 months, or whatever it is, right? A lot of folks are thinking about what are different types of vehicles to enact social change. Because for one, there's not a lot of, funders are sitting on the sidelines in this moment. So fundraising is getting harder and harder. Funders are getting scared. At the same time, what people are asking themselves the question, what is the efficacy of our work if it is 90%, 100% grant funded, and we are at the whims of the donor class, and their sentiments, their feelings of generosity, or their feelings of fear, right? In this moment, it's fear, right? And so folks are looking towards creating actually for-profits for their existing nonprofit entities and using other vehicles like a fiscal Model C fiscal sponsorship vehicle to continue to receive philanthropic capital, but being in a for-profit structure. That's a whole nother conversation, but it's actually part and parcel to what we do. Because again, it's about being flexible to the needs, hopes, and desires of the communities that we are working with, not trying to fit them into a traditional finance box, in this case, a traditional nonprofit box, then quite frankly may not work anymore. So just appreciate that contribution about LOHA. Calandra, I'll look that up, but also, offline, if folks have questions about any of this stuff, I'm happy to talk, because I know right now a lot of nonprofits are struggling, right? They're under attack and they're trying to think about a different way to go about business. So we're going beyond regenerative economics now. We're going about like fundamental services that are done by nonprofits, right? If we thought our work in regenerative economics was hard last year, it's even harder now. If you folks probably already feeling it, but just to say.
Yeah. And we always put a list of the URLs of the groups mentioned, and Jen works at that, and we might need to email you back and forth because you mentioned so many, but I think we want to make that a resource we can share. I hope I'm not speaking too much for you, Jen, but that was really useful.
Absolutely. And Alex, would you mind dropping your email in the chat real quick in case there are follow-up questions or connections that need to be made there? I would appreciate that.
Yeah, totally.
Yeah, those are big questions. Reacting to the privatization of social change, man. That's some heavy stuff. So, I know we had Tom. Did you have a question here for Alex in particular? Here, I want to make sure we didn't skip over you.
No, I don't. If they were asking me, Tom Stanton.
Yes, yeah, absolutely. I saw you in the chat here mentioning a few things, so I want to make sure you could ask a question if you had one there. Well, thank you so much, Alex. We're really, really grateful to have you here. I'm looking forward to following up with you future and to stay in LinkedIn to what you guys are doing and how things are developing here. Remember, we are doing this every 2 weeks with another fund, more change makers out there. Jen, who do we have coming up next? What's our next one look like?
Yeah, thank you for asking that. I was so enthralled with what was being talked about. I'm like, oh yeah, I had it already, and then I got sucked in. So so we're gonna have Blake Jones of Kachua Impact Fund on October 22nd, and then we'll have Ryan Anderson of Steward on November 5th.
Okay, excellent. Looking forward to both of those. Make sure to tune in here with us, join us. Watch the backlog either on the Main Street Journal or on Impact Alpha. And Jen, is it up on the podcast networks now? It's up on iTunes and Spotify and all that, I believe, if people need to.
We are in Impact Alpha right now.
Okay.
Working on being a official podcast. So
we'll be there soon enough. Awesome. Well, thank you guys, everyone, for joining us here. Join us next time. Thanks to Kevin. Thanks to Jen. Thanks to Michael. Thanks to everyone who joined us, and a big thanks to Alex Saingchin from Just Futures. Until next time, remember, we are each other.
Thank you.
Thanks, everybody.
Great and dense. Really liked it. Thank you.
All right, take care.